And go.
A very good evening to each and every investor that has joined us today, and welcome to today's webinar event. I'm really happy that all of you all have joined and found out time for this particular event. Let me start off. Today we're doing something different. Okay, the last time when I spoke about in the webinars, we spoke about Mojo One strategies, and this time I'll be taking across something which is a bit new. I've tried this event previously, and we go through different news articles and we try to, go in between them and actually see what are the actionable insights and different things we can learn from these particular news articles. So, without wasting any time, let me start off. Investment in equity and equity related securities does involve a high degree of risk, and you should not invest unless you can afford to take the risk on their investment. The news articles I'll be talking about today are intended as insights for learning and analysis, not as direct buy or sell recommendations. So use them as a guide to understand how to evaluate news rather than as an actionable investment advice. So starting off, a timeline to today's event. First off, I'll just set up and refine your thought process when it comes to news. Okay, we won't just straight off start reading the news articles, but I'll have to do some setting up when it comes to how do you approach a news article. Then we'll also break down this is very beautiful quadrant where we'll look at what news you should read and what other kind of news articles you should avoid as an investor. Then we'd be looking at breaking down some of the articles. I've collated three articles from different newspapers. Two are sector stories and this one particular stock story. And lastly, we'll be looking at what other webinar events we're going to cover going forward. So without wasting any time, let me start off. This particular picture over here, so this has occupied 95% of what you consume. The news articles you read today, 95% of what you consume is just on that particular screen or paper, leaving only 5% for reflection. So when we start off, I'll be showing you some rules or some particular, guidelines you all must keep in mind before you go ahead and read any particular news. Now, there's this particular author, we also covered his particular webinar previously of Psychology of Money, Morgan Housel, and he has very beautifully broken down how to read or how to understand financial news. Okay, and there are roughly five different points you'll have to keep in mind before you go ahead. The first one is that as an investor, you should approach news articles and read the ones you're going to disagree with. And for the main reason that readers are vulnerable to something known as confirmation bias. When you start with an answer, you dig for information that actually backs it up. You avoid reading news articles that go disagree with you. It causes some trouble to your mind. So, as an investor, when you start off with reading news articles, don't be shy from reading some article or reading something negative about your favorite stock. Okay, ideally, you should go and hunt those news first as well. It's going to be a bit difficult, but as you incorporate this in your daily reading habits, it would kind of help you get a better perspective of the stocks you hold. The second one is that don't think every news is actionable. If you find yourself tempted to tweak your portfolio after every news, do your future self a favor and read less of it. I've seen many investors go ahead and just buy any particular stock which is in news or trending or in action today. But that doesn't really help you make your portfolio. Every news cannot be actionable, and I'll be covering that up later as well. The third one is reviewing old news. And now you might be thinking, "Ki, why is he asking me to read something which has already happened?" For the main reason of fact, you would learn that the majority of predictions never come to being close. And most of what we think is important is actually trivial in the long run. For example, the COVID-19 market reaction. Okay, the market saw a very big dip and a very sharp recovery as well. No one even talks about that today in the market. If all the Evergrande crisis of the real estate Evergrande crisis in China, we had an exclusive webinar on them. A lot of investors were afraid. And over a period of time, it turns out that these articles are just, not going to have a major impact in your portfolio in the long run. Okay, many of them are also clickbait in nature. So when you're going through these news articles, take some time out. I don't know if anyone has an old newspaper, but you should also go back and see past 2 or 3 years. Most of the stories which people talk about don't really materialize in today's world. Two more things you should keep in mind. The next one is understand that your neighbor plays a different game when he reads the paper versus when you play. Okay, this line is written very nicely over here. A long term investor sees a headline about selling stocks before earnings and shakes his head in disbelief. A trader reads an article about stocks for the long run and thinks people are oblivious. Momentum investors think they're both missing it. Finally, bond investors think all three are crazy. The way you're investing today, what's your time horizon is very different from someone else. And the news author won't actually understand that. He's just putting a particular article in front of you. It's your duty also to understand what game you're playing in the market. Are you looking at a trading philosophy? Then you might have to react a bit faster. Are you looking as a long-term investor? Most of these headlines won't make sense to you. And finally, the last point of shaping your thought process is actionable takeaways should be rare. And this is very important. From the three different news articles I've read, I can only find one actionable takeaway. So when you read something, it does not lead to an actionable takeaway because the person writing the article has no idea who you are. So these 5 points are something you should keep in mind. Okay, you can also go back and see the video later, but these 5 points are very important. It takes time to incorporate them in your daily reading habits. But as you read, as you go ahead, read, okay, we follow the confirmation bias rule, you understand people play different games and all of it, you'll be a much more informed and a much more mature investor when it comes to reading news articles and taking actions on them. This quadrant is something which was attached in the article as well. Okay. Now, I'm not sure if you're able to read this, but you can see on the left quadrant over here, we have noise and important news and common and rare in the x-axis. And what this shows is that most of the news articles, if I just highlight it over here, this particular quadrant, if you see, this is around 60 to 70% of the news you get to see. Emotional clickbaits, gossips, rumors, uninformed opinion, or uninformed analysis. Nothing actually matters to your portfolio, but it is something that you'll often see covering up most of the pages. Then you have unbiased news not relevant to your life, unbiased news relevant to your life. Okay, smart analysis but not relevant to your own goals. You can still go ahead and read this particular one. It might kind of help you a bit later on. Then you have reasonable analysis you disagree with. And lastly, you have news or analysis that changes how you think about an important topic. And this one, which I'll mark over here, is that news or analysis that requires you to take immediate action. Now, this is important and it's also rare when it comes to reading newspapers. When I talk about this last particular thing which you should focus on, let's say you hold a particular stock in your portfolio and there is a news article that, there's a corporate governance issue. Let's say the directors resign very immediately without any prior notice, or there's any particular, scam or a fraud with the company. That is something which can be actionable and where you could take some action in your portfolio. The rest of it, most of what you're reading is just insights or something which is not even related or required for you. Okay. Now that we've kind of understood what happens, how you should approach these news articles, I feel more comfortable now taking you across these articles. So now that we set the base, let's move on to this first article which I found on Economic Times, which talks about FMCG firms and they are hiring to fuel growth in rural markets. Okay, now if you see this particular article over here, breaking down this article, I'll make it a bit easy for you. FMCG companies are expanding their distribution network in rural markets. We always talk about FMCG having some breakup between the urban and rural market. Inside the rural market itself, this article speaks about they are increasing their sales force. It's on-street sales force. So more people going to different distribution chains and actually pushing the product. When they talk about FMCG companies over here, they've highlighted some of the few names over here, which we'll focus on. Dabur, Marico, Tata Consumer Products, Parle Products, and a few of them. Okay, a few of the listed players over here. Then the cost has been increased due to this alignment of minimum wages. Okay, but there is a fall in the attrition rate. What I mean by that is that prior to this, there was no formalized sales force for these FMCG companies, but now there is a formalized workforce. So this article kind of also explains us that it will increase the cost for FMCG companies over here. But over the long run, the benefits would play out. Okay, this particular hiring which you have just done would be a growth over the long run and not in the short term play. Now, when you read this article, it does not give a clear indication that you should go ahead and buy companies from the FMCG space. We have to do a bit more digging deeper, where I'll take you all on the side and help you all breaking down this article. Just to sum up, FMCG firms currently are hiring to fuel growth in rural markets. They're actually having a sales force in this, street sales force over here, and they're going about pushing to, the actual points of the customers, explaining customers about the products and so on and so forth. Now, if you look at the FMCG companies over here, what I've done is I've actually looked at the last quarter performance where it says 1/3 of companies declaring positive results. Since the article is talking about large cap companies, it makes more sense to actually go and look at the large cap segment performance. Here, if you see, one third of companies are doing well in the FMCG space, but the larger players have done comparatively better over here. There's a slight increase from 32% to 43 or 44% over here. Okay, I can also take it on the site and actually show where you get this particular data. You can simply go to the result corner over here. Okay, and you can see here different sectors, different performance. Let's go on public banks, for example. Over here, there is a filter to look at the result performance only for FMCG companies. Okay, you can either go from the index or you can go to the industry and search for FMCG companies. Okay, you can see here 32%. This is what I highlighted in the particular screen itself. Okay, now if you go ahead, I have also selected large cap over here for the main reason of fact that 44%. So there's an increase in the positive performance of companies in the recent quarter, and your large caps in the FMCG have done well. And the companies the article is talking about currently are these ones. Okay, you got to ignore some of the FMCG companies which are not having a rural presence, but something like a Nestle India, Patanjali Foods, Godrej Consumer, Marico, and all of these companies within the FMCG space is what this article is talking about. As an investor, how would you approach this particular news article? Okay, you have to first of all monitor the companies within this industry. Secondly, since this article is talking about hiring and a longer term play, you cannot go about just buying this company and expecting them to do good in the next quarter. Actually, they won't be doing good in the next quarter because they've increased their hiring as well. Okay, and when you increase your hiring, obviously the cost would be going up as well, and there would be some impact on the company. So this is more of a long term play. If you're kind of believing a company to have a good rural presence in the longer term, that's when you have to actually enter these companies. Okay, since you're talking about the rural segment, it's also important for you to see how the revenue is growing within this rural space. Okay, which is usually discussed in investor meet and con calls. Okay, so it's not talking about just the revenue increasing. What you'll have to go is go back for these companies over here. Let's say Marico, or let's say Dabur India, Britannia Industries, Nestle India. So let's look at Nestle India over here, for example, or even HUL. You have to go about in these companies, okay, FMCG, and you'll have to look at the revenue of these companies. Here you can see over here within the rural space. Okay. Now this kind of data is usually available in investor con calls. It's not actually available for all the companies in the presentations as well. But when you go and you check the next results, or let's say after a year, you'll have to check the rural growth and then particularly take a call that which company has done well with this news article. Don't go about straight just buying the companies. Read the news article and try to go a bit more in depth. Now moving on to this next particular news. Okay, this is our stock specific news about Crompton Durable Business. If you see over here, I'll just break down this article from Mint. The stock has gone up 9% following the results. And what this article is talking about, there's been a strong performance within the electronic consumer durables, which has shown double-digit growth, okay, over a longer period of time. One particular segment of the kitchenware of this particular company lags behind. Now, as an investor, when you read this article, when you see consumers, Crompton's durable business is on track, you might go about straying buying the stock. But here you have to take a step back and dive deeper into understanding this news article. One more thing highlighted by the company is that they're focusing on premiumization, okay, through higher pricing. Now, this might increase the revenue of the company. The top line will go up. Okay. I don't know if this article can be particularly seen, but if you just take a screenshot of this, these are the 4 main points this particular article is talking about. As an investor, can you go about buying the stock straight? No, there is some research which we're going to do in the next slides. When I looked at the quarterly performance of Crompton Green's consumer electricals, first is I've compared it with the previous quarter. Okay, and when I compared with the previous quarter, I was a bit amazed that, okay, the revenue is down for this particular company. The profits also are not that great, but still the stock has moved up by 9%. Now you got to understand that with such particular companies, there is a particular seasonal thing which might happen. So when you look at the last September quarter, it is when the revenue has gone up and the profits have also gone up by 30%. Why am I looking at this particular company seasonally? Because I think the Jan, Feb, March quarter, when there's a high demand of fans and other appliances, is when this company has been able to have a very good top line. Which is why the company has done comparatively better in the June quarter in the last 3 years. Okay, so you look at the financials year on year, you're also supposed to look at the financials quarter on quarter as well. Okay, and then I kind of realized that I can't just look at one quarter and say, okay, the company has not done well. But over a period of time, when you look at the last September quarter, is when you find growth, which is why the company must have gone up 9%. Should I go and buy it? No, let me take another step back and actually go and dive deeper. When I looked at the financial trend of Crompton and the price movement of this company, there is some correlation between the financial trend and price. And if you see the price which is marked on the black line over here, and you look at the financial trend, which are these bars, okay, how the company has performed. Whenever the company has performed well in this particular period, as you can see, the price has seen an improvement. When it has not done well, it has moved downwards. And finally, when it has done well, it's also moved up again. This is ideally because of the recent market correction which has happened over here. So the price has actually moved down. But the market has rewarded the stock when it has shown an improved financial trend. In the upcoming quarter, if there is an improvement in the financial trend because of this particular news article, could be a nice time to enter this particular stock. Another small insight which I have removed over here is that in this particular sector of consumer electronics we're talking about, 2/3 of the companies have seen a positive trend. Okay. And it's what the second biggest company in the durable sector over here. Okay, you can see 14.38% of the market cap is with this competitive consumer. And another nice slide over here, if you see the pie chart over here, this is the revenue pie chart. So 12.96% of the revenue in this sector is by this particular company, but it has a higher pie of the profits. So that gives some belief, okay, the company has not even able to get a higher pie of the sales in the industry, but a large pie of the profits. Okay, which is gives me some, there might be some operational efficiency in this company, which is why they're able to get higher profits even with less amount of sales. Okay, this particular screen is available on the verdict report section. So if you download the verdict report for any company, since I'm talking about Crompton, I'll just take you on the site over here. Okay, since I'm talking about Crompton Greaves, here you can see the verdict report of the company. If you download this particular verdict report is where we actually dig deeper. This one download of the verdict report can actually help you understand the whole company itself. Okay, this company is currently very close on the buy range. Okay, it's changed from buy. It was hold previously, but it has now come on the buy range. You can add this particular stock in your watch list over here. And what I would suggest you as an investor, how do you go about tracking the stock? Have a look if the stock is turning bullish soon. So if you go to technicals over here, okay, currently it has turned mildly bullish from bullish. But if the indicators break out, then there could be some bullish pattern. How are other companies declaring results in the next season? This is something I actually do. What I go about is if I have bought a particular company, okay, this is a cheat code, but if I buy a particular company, what I do is I kind of have a look at what other companies are going to declare results first. Okay, and if they show a green trend, if they are showing, all these companies within the sector normally move up. We've seen that at IT as well. If the IT numbers are good for one particular company, all of the other IT companies before declaring the results start moving up, which is something you have to keep an eye for this particular company over here. Once you add it in your watch list, check the technicals. Also check if other companies are declaring results and how are they doing. Okay, if they are doing well, good as well, then we can understand that okay, this particular company might also do well in the next season. Any guidance by the management. Okay, if the management comes out and talks anything about Crompton Greaves is where you can take a call. And is the Mojo score finally improving? Okay, the score of all scores, the Mojo score, if there is any improvement from 68 to 70, 75, as an investor, you would be comfortable entering this particular segment. The news article itself says that the main segment of this business, okay, the main segment, which is electronic consumer and durables, has shown a double-digit growth for quite a few quarters. So that might be some good insight to pick up from this particular company. If the biggest segment of this company is showing a double-digit growth back on back, it does give some insight that this company might move up going forward. But as you see, I'm trying to break down this article to its depth. I'm not just looking at the headline and saying, okay, I can go and buy this stock. I'm adding it to my watch list, but I'm trying to understand what are the different factors that might play around. How should I approach this news article, which is what I'm trying to share with you. Let me move on to the third article over here, okay, which is the final one. I won't go around showing a lot of articles, but this third article would kind of give you a slightly alternative approach to reading news. This article came on Mint, and I'm not sure if many of you all know that the airlines is riding high, mostly due to wedding season travel surge. Okay, this particular article from Mint, when I broke down this article, I found out there's a big spike in flight bookings. The daily passenger traffic in India climbed to a record high of 5.05 lakhs versus the previous record of 5 lakhs. Okay, there has been a growth. Tier 2 cities are powering the wedding season this year. A lot of companies A lot of flights are actually taking off from these tier 2 cities. A lot of people from the tier 2 cities are moving around and traveling by flights. Air India has also made a statement over, okay, now this is not a listed company, we cannot invest in Air India, but it has said that we might see a strong quarter three support. This article is on the Indian Airlines. Tell me, how many options do we have? We have two listed companies over here. One is SpiceJet, okay, which, you can see the price movement. It has negative operating profits also. And then we have Indigo. From these two companies, which ones could you invest in? Let's think a bit alternatively. If I take you on the side, okay, let me go to the screener section and let me highlight about the airline sector. So I'll just clear all filters. I'll go to industry. Now they're saying that the airline should do well in third quarter. If I click on airlines over here, you can see there are three stocks. I would like her to ignore this one particular stock, which is Global Vectra, because it's mostly into helicopters. But you can see SpiceJet and Interglobe Aviation. Now you tell me, when you look at a score like this, which particular company would you go about investing in? Would you be comfortable? This is a sell at 33 and SpiceJet is a sell at 39. So I would not suggest any investor to go against the trend. I don't even see this as a hidden turnaround currently. Okay, the stock has moved. Okay, this has shown a particular movement over here, but the price has remained subdued. Airline stocks over a longer period of time have not been great wealth creators in the Indian market industry. What should I do with this article? I would like you to think alternatively. Okay, and I'm picking this particular screenshot from of Nvidia. Okay, when everyone digs for gold, you could look at selling shovels over here. Okay, the main reason for that is that when this airline sector is doing well, instead of going about hunting airline companies, why can't we look at travel services stocks? Okay, stocks like Make My Trip or Exigo. Why can't we look at stocks with companies which actually go about selling these tickets on their website? Okay, it's obvious that if the airline sector is doing well, even these companies will get a lot of traction, which is clearly what Nvidia has done over the long run. Okay, when there was a high craze for GPUs and processing units, Nvidia was the one to sell shovels and not actually dig for gold. So this particular article then shifted my approach to two companies from the travel services sector. So let me take it to the screener now. Instead of airlines, okay, what I'll do in the industry is instead of airlines, so I'll just hide the filters. And now if I select industry over here, instead of airlines, let me go to travel services. Okay. These are the 16 companies over here, many of them who actually sell airline tickets. I will not look at IRCTC, but you can look at some of them like, let's say, okay, Easy Trip Planners or someone like the company I found out over here, which was interesting, is this one. Okay, Lead Revenues, which is none other than Ixigo. And the reason I've picked this particular company, if I would go to invest, is because it has a healthy score of 60. It has changed from sell to hold on 16th of November. Okay, so that's hardly any 2 weeks ago. And the technicals also show a sideways shift from sideways from mildly bearish. And one thing which was interesting, that it's a potential turnaround. I'm not saying it's a hidden turnaround, but when you look at the financial trend of this stock over here, from a negative financial trend, it has moved up 20 very sharply over here. Very recently listed company. Okay, it's not even a year old, but this is something I would keep an eye on. Okay, Ixigo here with a score of 60, and another company. Okay, so this particular company, when I read a bit more in depth, it says that it aims to grow its transaction value. It currently just has a 5 to 6% market share in airline booking space. Okay, so it's very small, but it's looking at growing it. With the industry growing of the airline sector and this particular company also focusing, it is doing a lot of different changes in the application also with regards to, how to smoothen the process for someone booking an airline ticket. So with this particular company also coming up in the front, I would be a bit more comfortable in investing in a company like this. Okay, it's only a hold call over here, but when it goes about turning or having a potential turnaround story, I'll be able to make bigger profits when I look at this company. The next one is sadly Make My Trip, okay, which is one of the biggest companies over here when it comes to online air tickets. Sadly, it's listed in the Nasdaq exchange. So here, what happens is that if you're investing in international stocks, so let me take you from India and let's move straight to US over here. Okay, Make My Trip would be found over here. Okay, and if you see the dashboard over here, it's 62, but this is for $114. And if you could invest in this particular company, which is, not in India, you could go a bit about investing in these companies. Now, the news article was about the airline sector. many of the investors might go straight off investing or picking stocks from the airline sector. But if you take a step back and actually see how airlines have created wealth, I wouldn't be comfortable. I'm not sure if you would be comfortable. So you could look alternatively also. One particular sector might go up and take all different sectors around it, which are interconnected up as well, which is what I'm trying to do with this particular news article. And the main purpose of this event is not just going, reading an article and buying you and suggesting a stock. My point was what's my approach with breaking down these news articles and my alternative strategies when it goes about finding a particular sector, finding a good news, okay, and then looking inside it and actually seeing, okay, what are the different insights we can get from it, okay. So it's a really short presentation. I don't want to take much of your time. What I believe is half an hour is all what a person can consume. I don't think about going about for an hour as well. If you have any particular questions, what are the different kind of events we can break around? If you want to learn anything about a new particular product, anything about if you have any suggestions as what other different webinars we can cover, I'll have a word with our team. I have a word with Mohit as well, and also we can have other webinars. So they can be we covered up something like Mojo One strategies. Today I've taken you to something which is very alternative, reading news article and discovering stocks. Any particular suggestions you'll have, you can simply drop it in the chat box over here on YouTube. I'll make a list of them, and then we can go about having events, specifically for you all on different features as well. So without wasting any time, Kevin, you could pick up any question the investors have.
So the first, yeah, sorry. So the first question comes from Mr. Ashwin. How do you know when to sell the stock?
Selling the stock isn't a very straightforward answer, but what I go about doing, or what you should go about doing, you as a market small investors, follow the score. Now, I've seen few of the investors saying that if a strong buy stock, by the time it comes to sell, obviously the stock is also been falling down. So there are also profit booking rules you can go about, when it comes to investing. I think with the model portfolio and the PMS portfolio, we do have these rules set in place. But as an investor, there should be a profit booking rule for you as well. Okay, you can go about having a profit booking rule. Like, if the stock I've made profit and is now falling down from a certain percentage, let's say if it's a large cap, mid cap, small cap, you can set those profit booking rules for you so that you don't wait till the stock falls from strong buy state to sell. Selling a stock straightforward, I would suggest you if there's any corporate governance issue, I don't even look back. I just sell the stock straightforward, even if it's any particular rating or it's doing really well. If there's a corporate governance issue, I go about selling the stock straightforward. And I think these 2 points as well. So you could incorporate them with your particular strategy when it goes about selling stocks.
Question comes from Mr. Mona Kumaran. Sir, what's the YTD? How is it calculated, and what is the difference between 1-year returns and YTD returns?
It's really simple. So if I'll just take you to one particular stock, let me go to Interglobe Aviation over here. And if you go to returns over here, year to date is nothing but Jan 1st till date. And 1 year we are looking back to November 29th. Okay, so 365 days versus from Jan to day itself. So not much difference. So if you can see the company 1 year, okay, has gone up by 63%. Year to date has gone up by 48%. And that's how you can kind of, calculate the returns for this.
The next question comes from Mr. Harshad. Because ETFs are traded live on the NSE, there should be a facility for us to load/enter these ETFs in our personal portfolios. Currently, this cannot be done. Suppose I buy an MO Nasdaq 100 ETF on the exchange, I cannot enter it in the MPF update.
So, as per my knowledge, ETFs can be added. If you go here, I'm on the portfolio section over here. You can actually go to mutual funds. So, ETF is something we add over here. And if you see over here, particularly, you can actually go about adding an ETF. So, I think it's actually in the mutual fund part of it. So, you can see some of the ETFs over here. Many investors do get confused why you're not able to add. Okay, so there's Motilal Oswal Nifty 200, all of them over here. If there's any particular thing not updated, you can simply reach out to us. Okay, so all the ETFs, to add an ETF in your portfolio, you have to actually go to this mutual funds section in the personal portfolio. You might be adding it in stocks, which is, I think, why you're not able to, kind of add that in your portfolio. But a slight difference over here, if I'm on the personal portfolio section, as you can see, you can go to the mutual funds, and there you can go about adding, searching stocks, importing schemes, so on and so forth.
The next question comes from Mr. Mahindra. Sir, where do you get the list of the stocks that are turning from mildly bullish to bullish from a specific date with Mojo score of more than 75?
So currently, if I take you to the screen of what happens, I get this question a lot, and it is an interesting point. This is something I also put in my wish list as well, so that the team can kind of work on that as well. If you look at the technicals over here, we have technical grades, and we have technical grades for today's period. Okay, we don't have technical grades for let's say we're talking about previously what was the technical grade and today what's the technical grade. So we just have the technical grade as on today. So it's kind of not possible for you to actually see when the technical is kind of turning. If you go to one particular stock, let's say I'm going to one particular stock, let's say Adani Wilmore over here. Here you can kind of find out that if the technical has turned and what date it has turned. So Adani turned bearish from mildly bearish. So it's actually going more further below. So yes, we don't have it currently on the website, but I will make a note of that particular thing and see if we can push it.
We have a good question here. It's from Mr. Uday. I'm new to this portal. What is the significance of the colored dots against each name of each script?
The colored dots, if you can see over here, are nothing but our four Mojo dots, which are the base of the analysis when it comes to score. Okay, namely quality, which is the yellow dot over here, you can see valuation of the stock at its current price, the financial trend, and the technicals. Now, these four dots across every names are so we've put them across every stock name is that you can look at the stock and kind of figure it out. If you're new to the portal, you might find that, okay, what are these? You can look at them as traffic signals. And the reason I'm telling you that is they're all green. You could just simply go ahead. If there's something yellow, then you should hold back. And if it's red, it's something where you should stop and think twice before investing in that stock. To break it down a bit more further, if you go to Mojo parameters over here, you can see quality is average, valuation is attractive, financial trend is positive, and technicals is bearish. And as you scroll below, you can learn about each of the dots. So you can see the quality over here is average. Why is it average? What's the valuation? Oh, it's attractive. What's the price at which it is attractive? Okay, this is a very nice snapshot over here. You can see till 314 it is attractive. After that, it gets fair. Then there's financial trend over here, how the financial trend has improved. And lastly, technicals, which you see on top. So the four dots are like traffic signals for you, where you can go about looking at a stock and taking a quicker action.
The next question comes from Mr. Ramesh. Greetings. Kindly make a call on finance in NBFCs, as many of the major groups are holding companies are there, and for us to learn in depth and again knowledge. I think the what Ramesh
Yeah.
sir is trying to say is that kind of have a webinar set up focused on finance in NBFCs.
Yeah, sure. We'll have that particular session, the right person for this. I mean, someone who would be really knowledgeable. I'll give a try on that, but I'll have a word with Mr. Sunil. If in his upcoming Q&A or something, if we can, talk a bit about finance and the NBFS sector in general, and we can see if we can have a particular event on that. Um, yeah, sure. I'll have a word with Mr. Sunil.
So Jason, we have a good question on the stock of the week. It's a long one, so just keep note of this. It's from Mr. Sarang. The question is about how to effectively use the stock of the week with limited funds availability. If anyone buys all stock of the weeks, he will need to buy close to 52 stocks in a year, especially if there is no profit booking calls from Markets Mojo given. Any middle class or normal retail investor won't be able to buy all these stocks if he wants a decent allocation to each stock. Please suggest a solution over this genuine query.
Yes, it is a genuine query, and I'm also not sure Kevin is also saying good questions. So some of them, all of your questions are really good. It's also a very genuine query. If you ask me, I wouldn't suggest you going about buying 52 stocks. Okay, none of us are mutual funds. We're all retail investors. The stock of the week, if you go about, I wouldn't actually, show display it over here because not all investors can actually subscribe to the stock of the week. So I can't take you to the particular section over here. But if you ask me, stock of the week is something, where every Monday when we give you the call, if you have space in your portfolio and if you have funds available, you could go about investing in it, but have a portfolio approach. What I mean by that is, let's say you have 9 stocks and let's say your portfolio is worth 5 lakhs. Okay. Simply divide them and you can take that particular 45, 50,000 and invest in the next stock. Don't go about trying to invest 10,000 in each stock, or let's say a small sum of, let's say, 15, 20,000 in each stock, and add a particular portfolio and create a mutual fund. It won't be suggestive. These particular stocks we are recommending have a holding period of around 6 months. So every 6 months, you can always hold a list of 10 stocks in your portfolio, including stock of the week. They have a 20% target potential over here. So we're not talking about a very long-term investment. Your portfolio will churn healthily as well. So don't go about buying 52 stocks. That's not the state of answer I would give you. Don't also go about adding a lot of stocks in your portfolio, even more than 20, 25. Every time you think you have the funds to invest in, you don't need that funds for around 6 months to 1 year, because it's a 6 months to 1 year call. You don't need that particular money. You can then go about investing a small sum, let's say 8 to 10% of your portfolio in that particular stock. Don't go about buying these 52 stocks. Uh, if there is no profit booking call, there's no profit booking call over here. So because we give you a target potential and we give you a holding period too. Okay. So if you want to have a decent allocation on these stocks, you can also have a satellite portfolio. A lot of investors who do is that they have their own portfolio. Let's say they have their own portfolio, and then they go about having another portfolio which for risk or something. There is where you can add one or two stock of the weeks. I'm not going to take you to the stock of the week section right now. I don't have the authority to do that because a lot of events people over here are, either stock of the week subscribers or no. And you might get to see the name of all the stock, which is not what I want to do. But as I said, don't buy those 52 stocks. You can simply going about either having a satellite portfolio or investing a good 8 to 10% in these stocks, holding them for 6 months. And after 6 months, once if the target hits or not, you can then think about exiting that stock.
The next question comes from Mr. Shrish. Can you give a presentation on technical analysis, training on technical analysis, how to analyze the trends as per different charts?
Training on technical analysis, with my limited knowledge, I'll have to do a bit of research as well on that. We can have this particular event. Okay, I'm not a very technical analytical person, but I can give an attempt on this. I'll have a word with the team. We'll see someone who has a bit more knowledge as well can do this particular event. I usually have a very longer term investment horizon. I usually hold a stock for 2 to 3 years. So I don't really look at technicals on a short term. And what we're talking about, we can actually break down each of those we can actually break down each of the technical dots we have. So if I take you to the technical section over here, we have 7 different indicators we look at. What we can do is have an event on actually breaking down what are these different indicators and how do they help you, come to a conclusion. I have done a very extensive event previously on quality and one event on financial trend, which is also available on the YouTube page. Those particular events, I used to actually do this particular series called Decrypting the Dots, where I look at one dot for a day, let's say quality, and then just break down the quality dot. Then I look at financial trend. I was supposed to do it for valuation and technicals also. So this would be something in the line, and we'll try to do this particular event surely.
The next question comes from Mr. Shiva. As we discussed on the 4 Mojo parameters, so if all the parameters are green, then can we consider it as a good to go company?
This question is by Mr. Shiva, right?
Shiva, yeah.
If all parameters are green, can I consider it good to go? Yes. If you have the stocks, all parameters green in color, it's a very clear indication that all the particular signals are green. Quality is good or above good. Valuation is fair. It's a real steel stock. So if you go to the Mojo stock section, you might find some of them like this. Okay, let's say over here, there's one token, look at Ashoka Buildcon. Strong buy of 91, up by 4% today. Okay. It's a Mojo stock. It's also a reliable performance in 16 days. 91 strong buy. Who wouldn't go about buying a particular stock like this? Okay, all 4 dots are green, heavy, strong buy over here. Let's look at the financial trend. It should have been done doing well over a longer period of time. Look at this. Look at how the price has moved. Okay, as the financial trends went up, it also moved up. Very straightforward answer. If you all 4 dots are green, the score would ideally also be above in the buy and strong buy criteria, and you could go about buying them. Yeah.
The next question comes uh, from Mr. Prabhakar. Now, what percentage of appreciation do we need to get to exit a stock?
Now it totally depends on your it totally depends on what actually your you know, what was your goal before you invest in that stock? Now, when you look at appreciation, what as an investor I would suggest you to do is there should be a reason why you're exiting that stock. Is it just because of 100% returns, 50% returns? In that way, you would never have a stock which creates like no multi-bagger wealth in your portfolio. When you talk about multi-bagger, the main idea was to kind of hold that stock till it's doing well. Okay, I've seen investors holding a stock for like 10 years. They ride the wave completely. So I would not suggest you to have a strong benchmark or a point where you say, okay, if I make 30% return, I'm exiting the stock. That won't help you all pick stocks which make a lot of returns. So don't have a very hard point as to, this is the point I want to make, and after this 20-30% I'll move. I want to make 100%. Is 100% also enough? If you see the equity market, there are small and mid caps growing to more than 300-400%. So don't have a point, don't have a fixed a fixed indicator ki I will exit at 30% or I'll exit at 40%. You will not end up making a lot of return in your portfolio. Exit if there is a change in the reason of why you invest in that stock. Let's say you invested in a particular stock because it has a good business in this particular segment. Okay, let's say you invested in Crompton Grease and it is looking at the electric consumer durable segment and it's producing a lot of fans. So let's say Crompton Grease says, you know what, we're not going to produce fans from tomorrow, we're going to produce ice creams. So that would be one big reason why you would say, okay, this is not the reason I invest in this particular stock. So then you could go about looking at something else. But when it comes to having a percentage filter, कि 30-40% के ऊपर मैं अभी निकलने वाला हूँ, then you won't actually make wealth in this market. Keep staying on that stock as long as it's in the buy criteria. If it's somewhere in the hold and buy criteria as well, you can keep holding it. As it turns sell or strong sell, the fundamentals deteriorate is when you should go about thinking ki now I'll not enter this particular. I'll think about exiting the stock. Don't look at price as a point when it comes to exiting.
The next question comes from Mr. Swapan. Can you find the market share of a stock at our Mojo website?
Market share is the first thing you'd see, sir. Okay, market share as in market share of the particular company in the industry. If you go to the verdicts report over here, it is shown for some particular companies over here. And what we do is we look at the market cap breakup and how much it has, or the sales market share, the profit market share, and so on and so forth. So I've downloaded the verdict report for Ashoka Buildcon. It is available at the bottom. You'll have to do some scrolling over here. Okay, it's not available for this particular company over here, but some of the companies, as I showed you, the market share for this particular company over here. Let me just take you to Crompton Grease. So here we had found the particular market share of the company. Okay, this was the second biggest company. So in the verdict report for some particular segments, which are comparable, that is where our analysis can actually give you a market share with regards to, let's say, market cap, sales share, or the profit share of the company.
Also, Jason, I think if you could also show what the shareholding also of the company, maybe.
Yeah, okay. The investor might be also asking about the shareholding. It's straight off over here. So when you say market shares, sir, first I thought about the share market price. Then I thought about the share because I actually spoke about the share breakup of the revenue and sales. This is the shareholding, which is also what you might try to be find. It's available on every stock. You just click on shareholding here. There's a particular breakup over here. Okay, for this particular company, you can see how the different institutions are being. So FI Holdings has increased their allocation in Ashoka Buildcon, which is a positive point. Mutual funds has remained one nonetheless. Insurance companies have also entered this particular company. So yeah, this is also the shareholding where you can look at for this particular company.
The next question comes from Mr. Murli. Hi team, I'm new to Mojo, and if we create a model portfolio, how much time do we need to hold it, and when to book profits? When to change the portfolio?
We don't assume that you would change the portfolio ever. We assume that you'll be a long-term investor. But we will reach out to you on when to exit the stock. So let's say you create a model portfolio starting with 1 lakh or any amount. We will monitor that portfolio for you. We will monitor for the companies in that portfolio for you. And if let's say one particular company from that 10 to 15 stocks are not doing well, you'll get an alert. You'll have to sell that stock. There'll be some cash in your portfolio. You can generate a new advice, buy a new stock. You'll get an alert for another stock you have to sell it. And we will also explain to you why we are asking you to sell this stock. Okay, so let's say you have 10 stocks now and Ashoka Buildcon, for example, is not doing well, or let's say the financial trend has deteriorated. You will get an alert and then you can exit that particular company. So you don't have to actually just stop that portfolio. We assume that you have that portfolio for eternity. And if any stock has to be changed in that portfolio, we will go about informing you.
The next question comes from Mr. Ravindra. Good evening, everyone. The CFT score of Varun Beverages does not look correct when there's a significant growth on a YOY as well as QOQ basis. Will you please
So let's
comment?
look at what happened with Varun Beverages. So there are 12 factors working, but there are also 11 factors not working for the company. If you ask me whether the CFT is not working well, let's look from October 20th, the last negative quarter. When the CFT was above the 20-25 ranges, the price did move up. And if you see the last financial trends over here, the price actually plateaued over here. Okay, so if this green bars were as high as these green bars, then there could have been an upward price movement and it would be peaking over here. Currently, you can see it's having a plateau movement with the price. It was around 600, 580, 26 April. And since then, all the quarters it has declared is over here. You asked me quarter on quarter and Y on Y. So let's look at the financials for this company. And here, since you're looking at a seasonal company, it's looking at last quarter's change. It's up by around 24% over here and 23%. If you look at Y on Y, the company, okay, so if you look at quarter on quarter, the company is actually fallen down. But it's a seasonal company, so I won't actually expect. I mean, in the summer season, it might be that people are actually having more of cool drinks. So June's quarters has a good bang over here. But in September, it's actually fallen low. But financial trend just doesn't look at top and bottom line, sir. There are a few things not working for the company. The interest has grown, so it does signify increased borrowings. Okay. Debt is also at a higher level over here. Debtors turnover ratio is higher over here. So that is one reason why the financial trend has been lower. You can see the ROC is also lower, so return on capital employed. So there are 11 points triggered. The beauty about this financial trend at Markets Mojo is we don't look at just the quarter on quarter Y on Y sales and profit. We're also trying to look at something which other investors cannot see. Which is why I would say it's a very good example also why the stock has not been able to move up very handsomely in the short term period. Because if you see over here, 1 month it's given 1% return, 3 months it's underperformed the market, 6 months is at par with the market. From January it has moved up. Okay, but in the recent period it has also not done extremely well. So I would not agree with your I mean with your statement of it's slightly different. There are a few things apart from sales and profit, let's say, as I mentioned, the debt of the company, which is why there could be a reason that it has not moved up.
The next question comes from Mr. Shyam Sundar. The Mojo score is often a lagging indicator rather than a leading indicator. A comments on this, please.
So if you ask me about Mojo score, it is not, it's a leading, so you're saying it's a lagging indicator. What we've noticed is that as companies perform well consistently over a period of time, there is also a high probability of them performing well if they show consistency. Yes, you're right that Mojo score is a lagging indicator. And why would someone actually go about listening to an analyst and his opinion, which could be a leading indicator as well? But actually, it might not actually turn out to be true. What I mean by this is let me break it down for you very simply. When you look at lagging indicators, let's say the quality of the company. Okay, we're looking at management risk capital structure. It is a past data point, but it also gives you a very strong approach that okay, if the company's quality is good, in the future it should also do well. Let's look at valuation. It is a lagging indicator as we're looking at valuation over the past different data points. But if the valuation is attractive today, it's also giving a leading indicator that it has potential to move up forward. Financial trend, we have an entire strategy of reliable performance where if we've seen that if the company does reliably well or consistently well, there is a chance of them moving up as well. Technicals over here, technicals does move about price movement. Price happened in the past. But here also, if all the indicators are good, the RSI is at a good range, we've seen companies moving up further. I am not very comfortable investing with analysis which has, let's say, talking about future or something which, someone has an opinion on something because there is some kind of bias which anyone would have when it comes to talking about a leading indicator and because he has to put some input over there. He has to add something, let's say a dividend discount model or something like, a model where you have to actually go about looking at the future of the particular movement. So I'm not very comfortable when it comes to a leading indicator. Lagging indicator, yes, Mojo score, but it gives you truth. All the things which are factored in the company, all the data points are there. Any analyst can come forward in front of you and tell you, okay, I believe Varun Beverages will do well. And he has his thought process. He might add a particular discounted factor over there and add his own opinion analysis, which might help it look like a leading indicator. Here at Markets Mojo, we look at what has happened and what's the truth, what has already been factored in the numbers, because data doesn't lie. What has happened in the past and what is the real state of the company, the data won't lie. So we're looking at the data, most of this is actually, but it also gives you some idea of what the company will move around going forward. So it's not a very straightforward leading indicator over here. But yes, looking at how the four dots are designed, it does give an idea of how the company will be moving going forward.
We have a question from Mr. Bala Sundaram. Nice presentation, Jason. Appreciate your insights into how to pick stocks based on news articles. Truly appreciate you. You're the best.
Thank you so much. Yeah, thank you so much, sir. I've also heard your name before. I think you used to also come for the webinar events previously a year ago. And if you have any particular events you would like us to kind of have, it might not be just news insights, it could be any particular thing. I would suggest you please drop it in the chat box. And the further events as well, we'll go about having these events.
It's one question from Mr. Ganesh. When Mojo had started, it used to show all the stocks related news if we search about a specific stock. Also, it used to give a sentiment analysis about the stock. Is it still available, especially the news part?
I'm not really sure about sentiment analysis, but news is available. So if you go, we have a whole news section now. If you go to markets and you go to news over here, we have a whole news section about the different things happening in the particular market, how has it moved around. Some for the premium section, large caps, what do large caps look about, mid cap, small cap, news, stocks in action, stock recommendation, result analysis news across the web. So you can see across the web what has happened. Okay, gold is okay, some of these articles over here. So yes, news is available under markets is a whole particular section. Or you can go to one particular stock. You can search any stock's news. If you think there is a particular stock you hold in your portfolio, and know, is there any particular news? Let's say I'm holding, okay, let's say I'm holding one particular company over here. Let's say SpiceJet. I can click on SpiceJet and actually go about and seeing how is the result, what's the news, the stock has seen a positive trend. So there's a lot of news available on Markets Mojo as well. You can also go to a particular stock and see news articles. So if you go to TCS, you can click on news over here. There's news over here also. There's news all over the websites. I don't think we've removed anything. Ideally, we've actually gone forward and showing you a bit more of insights and upgrades.
We have another question from Mr. Bridge. Hi, Jason. I find that there are many trading calls that are given to buy for weekly and weekly positions. But when I see the Mojo score in many of these cases, it is a sell. Do I need to act on these calls?
So trading is a really different product. Okay, with there we're looking at some very different indicators, price action. What happens on the Mojo score is something which is a long-term indicator. Okay, it's not just the short term; it also includes long term. Trading is a really different game all itself. You know, if you want to go at trading, you don't need to look at the Mojo score. It's purely looking at trading calls for a short period of time. You don't have to actually mix the both. There can be a very sell-rated company which might move up, you know, just for a day or two, which is where there's a trading weekly call, or a whole rated company but has some potential in the medium term, so it might get a trading call for the medium term as well. So don't mix the two, sir. They're actually quite too different when it comes to scores and technical calls.
So, Jason, we have run out of time.
Okay.
Please go ahead with the conclusion.
Yeah, we surely I can see a few more questions as well, but you don't need to worry. We'll be doing a lot of more webinar events. I'm really happy looking at the participation of all the investors coming forward, asking anything you'll have in mind. Would really help you all learn and grow about being bigger investors tomorrow as well. And do come for the events in future as well. We'll be having the stock of the week on Monday, okay, and we'll also be having the Mojo One latest strategies probably on Tuesday or Wednesday. We'll be shortly sending out invites for the same. Thanks a lot for spending your time and coming for this event. I hope you all could learn something out of it. Goodbye and have a great day. Thank you so much.